Hi friends, this is John Kingston from JR Trading Zone. Now we are in the option selling strategy series. We are studying the strategies one by one. I have made one video on short straddle and short strangle. If you have not watched the video, just go and watch the video. I will be giving in the link. Short straddle and short strangle. This strategy is just an extension of short straddle. Short straddle is a strategy with unlimited risk. The profit is limited, but the risk is unlimited. When we do the strategies with unlimited risk, when the market gives a gap up or gap down, when you are taking a positional trade, definitely the trade which you don't have any protection will give you a great problem. Okay, the next thing, even though if you are an intraday trader, if there is any technical glitch or any other black swan event like that in that particular day, definitely you will be in trouble. If you are doing the undefined risk strategies, definitely. But this strategy which I am going to tell, extension of short straddle, and this is a risk defined strategy. When you enter the trade, you know what is your risk. This is quite safety for doing. This is a strategy what traders do. But to apply short straddle, in which type of market we should apply this strategy, this is a different subject. Okay, you don't go deep into the application of the strategy. I am just going to the introduction of the strategy, and the name of the strategy is called iron butterfly. Okay, it's simple. Just we are selling a call and put ATM strike, that is called short straddle. Now we are giving a hedge on the upside and downside. On the call side you are giving a hedge, and on the put side you are giving a hedge. Okay, very simple strategy, iron butterfly. I will go and show in the payoff graph. Yes friends, let's go to the option chain. The spot of Nifty is now around 19,684. Okay, this is the option chain for 28th September. Now the ATM strike is at 19,700. You know what is ATM strike? If you don't know what is ATM, OTM and ITM, I have made a separate video. Go and watch the video. Now 19,700 is the what we say ATM strike. Now we are going to build up a short straddle. To build up a short straddle, you are just going and selling one lot of call, 19,700, one lot of put option. Now let's go to the payoff. This is short straddle. The maximum profit you are going to take is 9,450. That if the market settles at this point. But on the downside and upside you are having unlimited risk. The risk is undefined. Okay. The next thing I will show you, the margin is 1,42,675 for making this strategy. Okay. Now let's go to the strategy builder. 19,700 call and put you have sold. Now you are going to buy a call option 19,700. On the upside you are going to buy a call option 200 points away. On the upside call option you are going to buy. Okay. Now on the downside you are going to buy a put option. It is 19,700 now. So you are going to buy a put option 19,500. Simple. We just sold an ATM strike, call and put 19,700. On the upside you are hedging it with 19,900 with 27 rupees. On the downside you are giving a protection with 19,500, that is the put option side. You are buying a put option worth 30 rupees. So you have sold two ATM strike, call and put, and on the upside call you are buying, and downside also you are buying. Okay, 200 points up and down, you are buying one lot each. Now you see, this is the payoff graph. Here the maximum profit you are going to make is 6,598. How to calculate break even, that is all a different formula. You don't want into the calculation, you just go into the payoff graph, just put your strategy, you can get all the details. Okay, therefore I am not going how to calculate the break even and everything. And the maximum loss here you are going to incur is just 3,402. If you get a maximum profit, you are just going to get 11.91%. Maximum profit means the market has to settle at this proper at the proper range. Anywhere between this position, anywhere if the market settles, you are going to make money. Okay, but the maximum loss is defined here. So even if you are taking a positional trade or intraday trade, you don't want to worry about the risk side. This is how traders limit the risk. This is called risk defined strategy. Okay, that's all from this video, a simple video how we can limit our risk. Okay, this is a risk defined strategy and the name of the strategy is called iron butterfly. Hi friends, I think you enjoyed watching this video. This is a simple strategy, but when coming to real market, trading market, definitely we have to know where to apply that. Okay, actually any strategy does not work 100%. Therefore, there are a lot of strategies. Definitely we should know in which market structure we have to apply. For this, you should know what are day trading patterns, what are the most successful patterns. I have made a video OSR at CPR. Okay, that I will be giving in the end screen. Watch the video. This is how I deal with patterns. I go behind the logic of the patterns. I enter in the proper area and exit in the proper area. Then if you want to know more about patterns, definitely you can go and download the book The Magical Indicator, which is available in Amazon KDP. Then if you want it free of cost, all the 22 patterns, if you want free of cost, definitely I will be revealing one by one when my subscriber count is increasing. So if you have not subscribed to my channel, subscribe my channel, then give me a like button so that it will be great applause for me for making this type of videos. Learn more, earn more. This is John Kingston signing off from JR Trading Zone. Bye.